Meanwhile, let's also put the spotlight on GSFC. That one reported very strong set of numbers for the quarter gone by, and you can see the stock chart for today. That one is up nearly 6%. And to discuss this, we now have Mr. S.K. Bajpai, Senior Vice President, Finance and Legal and CFO at GSFC, now joining us. Mr. Bajpai, good morning, and thank you so much for joining us today. Very strong set of numbers, nearly 21% increase in revenue for the fertilizer segment is what you have reported for the second quarter. And this was supported by higher sales volumes. Do you expect the momentum to sustain in the second half of the year, especially for the fertilizer segment, which aided growth in the second quarter?
Yes, certainly. As you rightly said, we have grown the revenue from operation by 21% to 3187 crores in quarter two. It is our highest profit in the history of GSFC. PBT also rose by 11% to 428 crores. And if you see quarter over quarter, revenue from operation grew by 46% to 3187 crores, and PBT jumped by 132%, that is 428 crores. So this is growth is mainly driven by both the segment, fertilizer as well as industrial product segment, where the chemical sector was not doing so well, but we have been initiated certain actions by trade as trading of ammonia and selling of one new product, HF Crystal. So that has led to the growth of industrial segment also. So fertilizer growth will be continued in the third quarter and fourth quarter also. There is no problem because the government has announced the better subsidy 10% on phosphoric acid, phosphorus, and 10% increase in the sulfur content. So subsidy growth is also there. So I don't foresee any problem in the fertilizer segment for the coming quarters.
Give us a sense with regard to how subsidy is playing out. Are there delays in subsidy recovery?
No. Government is quite quick in dispersing the subsidy, sure. And we have received the subsidy up to the last quarter of the month. So subsidy payment is not the problem. And over and above the subsidy, now in case of DAP, where the problem was there, well, government has resolved the situation and they are providing whatever the loss we are incurring, if any, because of the international price rise. So that is compensated by the government over and above the subsidy. So that is a very good factor, and there is no problem as such in subsidy dispersal.
No problem when it comes to subsidy, but what about raw material prices? I believe they have shot up on a year-on-year basis. Phosphoric acid prices are up, sulfuric acid prices are up, but margins have remained steady at that 11% mark when we look at the EBITDA margin figure. Do you expect raw material prices to come down going forward, and that perhaps could aid margins?
Yeah, that is correct. In case of sulfuric acid and sulfur, the prices have risen to 125% and 150%. And that is very high. And international prices, if you see, the sulfur is standing at around $400 per metric ton. So that is not sustainable as far as the pricing is concerned. So that will certainly come down in the coming months or the coming quarter. And that will add to the profits and EBITDA margin of the company. But nevertheless, in this at these prices also we have managed because we have the long-term contracts with the supply for sulfuric acid and phosphoric acid. So there is no much impact on the company as a whole.
So is there visibility on where margins going forward? Does it enter early teens? If at all, I can ask you that.
Oh, that margins are very good. As I told you that this is the ever highest profit of the quarter two in the history of the GSFC. So margins are very good, and I presume that this margin will continue in the coming quarters also.
Double-digit margin to sustain, at least in FY26. Is that?
Yes.
Okay.
Right.
Understood.
Yes.
Understood. So you have a strong tailwind of growth. You're seeing double-digit margins sustain. Urea was a bit of a problem in Q1. Has that reversed at all? How's that playing out in Q2?
Yeah, actually, one of the urea plants in GSFC we have revamped.
Yes.
To meet out the energy consumption as set by the government of India. So there was some problem, some production reduction. Whatever production during the trial run we have made, it is transferred to the capital accounts. So that was the problem of availability of urea was there in the Q1. But now onwards, there is no problem and plant are running very well. So urea availability will not be a problem, and natural gas prices are also coming down. So it will add to the some better margins in the urea also.
Urea segment margins are expected to improve, but I also wanted your thoughts on the demand environment now that we are entering Rabi season. How has domestic demand been? And cheaper imports from China has been a problem for the industry. Do you expect any kind of solution to this from the government side to curb imports into the country?
Yeah, as far as fertilizer is concerned, we are not having any problem from the Chinese imports because the fertilizers are hardly available in the from the China to India. So we are dependent on the other countries like Morocco and Gulf countries. But yes, in the industrial product segment, there is a problem as far as caprolactam is concerned because the cheap caprolactam is available to India. But we are finding out the ways how to curb it, and we have developed a new product like HS Crystal. So we are diverting our one of the intermediate product of the caprolactam like HS to produce the HS Crystal. And in the last quarter, we have made the 9,000 ton per annum capacity. We are having two plants. So we are running into the full production, and that is a substitute of the caprolactam and the our action against the Chinese cheap imports of caprolactam to India.
Understood. So that's as far as import into India is concerned. And you did talk about the industrial segment, and I believe that one has reported solid profit in the quarter gone by. Your thoughts on how industrial demand is expected to shape up? What kind of volume growth are you penciling in?
Well, that is very good set of numbers we have reported in the industrial product segment also. So we were facing a lot of problems in caprolactam, melamine, and other things. What you have narrated that the cheap imports are available. But now we are finding out the ways how to make this industrial product segment also a profitable one. And we are selling the ammonia in the Indian market. So that is one of the way we are increasing the profitability of that segment. Another thing, as I told you, the HS Crystal, that new product we have developed in place of the caprolactam. So we are increasing this industrial product segment profitability as a whole by a better margin, and it will continue. Demand is not the problem, only the pricing is the problem in the Indian market. If the cheap and there is cheap imports available from the China, we have to compete with the pricing also.
Understood. So that's as far as industrial demand is concerned. But also one last question when it comes to capex plans. Any major expansion projects that are underway either for sulfuric acid, phosphoric acid, or any other chemical?
Yeah, madam, sulfuric acid, one plant, sulfuric acid, 4 plants we are having, and the fifth one is slated to be commissioned in this month or in the next month. So we will be having the sulfuric acid of our own production to meet out the sulfuric acid requirement for ammonium sulfate and ammonium phosphate sulfate. So that will be a very good capital investment because sulfur and sulfuric acid prices in the market is very high. So we will be having our own production, and that will save a lot of cost for the production of ammonium sulfate and ammonium phosphate sulfate. Another small scheme, I would say, is going to be put up at Sikka for converting one stream of the DAP production into the APS. So that will the fungible production facilities will be available at Sikka. So that will also add up to the whether we have to make various grade of the NPK fertilizers. So that facility will add up to the better capacity utilization at our Sikka unit. One third project, PA and SA project, we are just now in the negotiation stage, and we will be putting this facility if all things goes well at the Sikka in the financial year 27-28. So that project will also add up our own phosphoric acid production capacity because phosphoric acid is the key raw material for production of any NPK or DAP production. So that PA will be available in house, and that facility will be coming in the financial year 27-28.
And now that you're very bullish when it comes to demand, raw material prices have also declined. What will your revenue guidance be? I was going through your financials, and last year you reported revenue of about 9,500 crore. What will your guidance be for the full year FY26 and for FY27, if you can share that with us?
Yeah, it will be growth of around 10%. We are expecting as in the first half, we have reported a good growth of 11-12%. So the same will continue for the rest of the financial year. And we are hoping that around in the fourth financial year, we will be having a growth of 10 to 11%.
Mr. Bajpai, if I'm doing the math right, by FY27, you'll be clocking a record top line, 12,000 crore plus, which will be a record. Do your margins inch up as well? Because you're doing so much on the captive side in terms of raw material. I'm trying to understand whether there's an upside possibility to margins above the 11-12% number. I'm just trying to get a sense.
No, I will not vouch for that more than 11-12%, but I will stick whatever we have achieved. That will continue at least for the rest of the year. And if there is some new product and pricing volatility comes in our favor, then yes, we can expect the better results in the financial year 27-28.
Okay, we'll let you go on that note, Mr. Bajpai. Thank you so much for coming in and speaking with us. If I'm just doing the rough math, Ashish, we're looking at around 10,400 odd crore in terms of top line if he does double digit. Likely he's going to exceed that because he's done 12% already.
Right.
And if that were to play out and another 10% were to play out, it will roughly be at around 12,500 odd crore on a 11% margin number, which is around 1,300 crore of EBITDA. Plus your other income is fairly healthy in a company like this. And therefore, you're looking at, and it's around a 7,800 crore market cap company.
Right.
So trading at around 6 times EBITDA is broadly the way one looks at this. So just for perspective. Couple of listings.
Growth,
and Tata Motors CV.
Yeah, discount price coming at 14% to the issue price.